The County Board of Supervisors, we do have an agenda in front of us. Do we have any additions, corrections, deletions? Been moved and seconded that we approve the agenda. Further discussion, hearing none, all those in favor of the motion signify by saying aye. Aye. Opposed, motion carried. Item 2, County Attorney General discussion.
Have work on this stuff on that lot, so now I have to get everything permission from Sands for looking at the road. There's a Jerry here. Currently, we should be ready for it. Right here. Okay, what do you want to know?
Somebody said they're coming to pick them up. Do they have the permission?
I don't know, is Mark here? Where's Mark's office?
Right next to you.
I'll stop in and see.
He told me before that they did, all they do, they gotta bring the money.
Yeah, they have to bring the money.
But he told me that a few weeks ago, that was, yeah, that they could get them.
All they have to do is pay the money.
So they're coming to get them. I didn't know if that was kosher. I don't get to see that money exchange.
No, but I'll talk to Mark.
Well, I gotta ask, and that lot in St. Ansgar, it's in the floodplain, or part of it. What are we gonna do about it?
I don't know, it's not gonna be detrimental to the building itself.
Okay.
The building's gonna be on the high ground. It could be just that we store plows and stuff down in that area, and I don't know, history says it's never flooded in there to begin with. I mean, all these new maps that have come out are really kind of questionable anyway. We've had that conversation too, but
I know that Ivan went through all that stuff with him, so.
and I talked to Ivan.
Yeah. It's just because Kelly's lot was 9 foot that was in there or something like that.
Okay, so going forward, that industrial park keeps falling off, so are the plans is that all gets built up? Or?
I don't know what their plans are. I just, when I asked them about it, I said, what are you gonna do with the other 2 lots that are completely in there? He said, they might just be farm ground. I think if we wanted to fill in the area that's in the floodplain, and it's only a foot of elevation is what's in the floodplain. If we wanted to fill it in, we'd have to go we'd have to talk to the floodplain people and ask them if it's okay to get the permission to do it.
Okay, well, my only thought was if somebody else bought a lot to the, say, to the east and the down, they filled
They
it
have
now
to,
suddenly.
their whole lot's
running
gonna have
water
to get
over
filled
us.
in order to do that.
Right, but you're gonna have to still continue to run the water the way the water runs.
The only thing that affects us, we were gonna put our salt shed in that location, and it may have to be moved.
Okay. I just was curious,
We'll play around with it a little bit more, but I don't know that it's gonna be a big issue.
maybe we could make a big retention pond up there.
Well, truthfully, I'm not so sure that if they, you know, there basically is a dry creek that goes through there.
Right.
And I'm not so sure if the city didn't want to clean that out a little bit, make about a 4-foot berm, which wouldn't be that difficult. You know, they could basically get that whole area out of the floodplain by doing a 4-foot berm. Or
That's all the comment I had, I just was.
I think what out of the whole 2.5 acres, it's maybe half an acre that's in it.
And not very deep in it either, probably.
A foot.
But
yeah, I mean, we got enough filler that we could
We
easily
can make it work. I think.
that sound like Jim.
I'm getting older.
Been an engineer too long, huh?
Not yet.
We can make it
Well, isn't
work.
most of the problem building in a floodplain if you're trying to get a mortgage and insurance?
Well, yeah, that's
That's a
case.
big issue.
And I don't want to put our structure in one, but we're going to be on the high side anyway. so.
But that's the big problem, is trying to get insurance.
Right.
Because else you can't get a mortgage.
Any water that gets in there is going to wash our leak plows out if we store them down in that hole.
And that's 100-year floodplain.
At least. It could be 500.
Anything else for the county attorney?
I have nothing more.
I just had, I sent, Mark had a mail check emails in, I know it's been busy, but I was talking to folks again on those super dump trucks.
Oh, I got that one.
trying to figure out whether it's legal for me to allow a certain route or not. I've had the enforcement people tell them that if we write a letter, they're good to go on the county roads. But when you read the Iowa code, that's where I'm confused, and I know we've gone through that before. Are we still allowed to go against the code and say, well, we're gonna allow these trucks on these certain portions of road? The portions of road are 7-inch concrete roads, other than this one down in Wagner Quarry here where it's gravel for not even an eighth of a mile, just off the intersection. I'm not so worried about that stretch. And the 7-inch concrete roads, none of these routes that I was proposing to allow them on have a bridge on them. So we don't have to worry about another analysis of a bridge. I'm not so sure it's that big of an issue, but I want to make sure we're legally able to do that. And that's where I emailed Mark.
Yeah, I did get that email.
I thought I'd stop in and see if there was anything to read further into, whether you can do it or not, so.
You're not gonna find anything.
No.
Is there a new classification of trucks? There are no regulations, that's the problem.
Well,
Like they said, they can raise up a set of wheels and then they're legal.
they're legal for 76,000 versus
Yeah.
80,000.
Yeah.
They've got a big project coming up, and they want to be hauling man sand from up by St. Ansgar to the Wagner Quarry here. And if they can get on the state highway, they can use their super dumps, but they need about 5 miles of county road to get there. And I'm not too worried about any damage to our roads. I mean,
Well, why don't we just write
well,
the letter?
we can work through that, and for now, I'm comfortable doing that, as long as we're not traveling over any bridges, because we haven't evaluated the structures.
So have you the state roads?
They will, up until, we don't want load after load coming into Osage to go to the Wagner Quarry. So they want to use the truck route around, which is a 7-inch concrete road, and then the road out of Dino Quarry is 7 inches of concrete. And at the Wagner, we're talking a small stretch of gravel, which won't be that hard to maintain, and it's pretty hard already anyway. I mean, there's been plenty of projects coming out of that quarry that's been beat up pretty good, so. I'm not worried about it if you guys are okay.
With that, Mark?
Well, I have to look at it. I think we need to sit down and you need to explain it to me.
Okay.
I think you guys know what the problem is, don't you? There's no regulations on those trucks that have the.
There's no evaluation for, the secondary road system in the Iowa code doesn't have a legal weight number for their configuration, but the primary system does. And I think our 7-inch concrete roads are gonna be able to take those. I mean, the state highways aren't built much different. I mean, if a state builds a concrete road back in the day, in fact, they were building 7-inch concrete roads then, so structurally, I don't think it'll be a problem. But, yeah, we'll sit down and talk about it.
Anything else? Thank you kindly.
Thanks, Warren.
Tom, you're up.
Quick update on the tanks. We'll be done with them this week, and then we'll, once the weather warms up, when it ever does, we'll have water testing. Okay, so probably won't happen towards the end of April. We had our pre-bid meeting last week, and when I came in here before, I think I told you guys we had 19 plan holders. We had 15 of them show up at the pre-bid, so that is an awesome turn. I was thinking we'd get about half. We got 3/4 or better, so the competition is great, which means that's very cool for you guys. The consensus, what's that? Oh, sorry. The consensus at the meeting was that the contractors wanted 1 more week of time after that pre-bid meeting for the bid opening. So, and I agreed that it's potentially going to save us a decent amount of money. So we pushed the bid opening back from this Thursday to next Thursday, 2 o'clock, City Hall. You guys are welcome. And then Lowell will get you an agenda item for the 16th, for what we got to do on the 16th, okay?
Okay.
But it's looking good, you guys. I mean, we've got a lot of interest, so that just means good money. You guys got any questions about how things are looking? I mean, we had that little get together with the city the other week, and I think everybody understands in a nutshell what we're doing out there. But I'm feeling good.
No, on the 11th, I think I'm gonna be down in Des Moines with Adam Shirley on a piece of property here for county conservation, so if that's,
We'll try to stumble on without you.
well, I know you did.
right, well, good deal. That's all I got for today, guys. Things are moving.
Okay.
All right.
Thank you.
See you next week.
All
Take
right.
care. Thanks.
Item 4, Wellmark Insurance Annual Renewal with Amanda Baker and Brad Bolton. Close
Very
enough.
good. Can I come sit over here next to you?
Sure.
All right.
You don't bite, do you?
No, I don't bite.
Okay, then you.
Pass out the materials. A little bit different setup this year. You guys have some temporary digs here.
You noticed, huh?
Yeah. Will gave me good direction, so I just got right over here. Do you want to come up, Brad, or?
I'm okay.
Doesn't matter either way. Okay, wonderful. Well, good morning. Thanks for having me. Obviously come every year to discuss the health insurance renewal, ISAC in the 24 counties and the program that we have together. So Brad Holton is the accounting manager at ISAC, and he joined us today because he was over in Forest City last night. So he just wanted to be here to just observe. So this year, obviously we'll go through the health insurance renewal like we typically do. I also have some summary information on healthcare reform, some of the changes that are coming up. You've probably heard on the news and the media that these exchanges are coming up this next year, the mandate for employers to have to provide health insurance coverage to their employees, and then for all of us as citizens to have it. So I wanted to kind of give you a real high-level overview of that today. So that'll be something new. And then the last thing, we do have a new option. Plan 11 that you've been on historically, there's a new pharmacy program associated with that. So we'll just review that as well and see if you have interest or questions in that. It's an optional program. We do have Plan 11 like it is today as well. So with that, I'll have you get out your PowerPoint. Every year, Bill Peterson at ISAC puts this together in regards to the fiscal year overview. So we'll just go through this quickly. Slide 2 is the fiscal year summary. It goes back 5 years. Of course, we'll review 2012 over to the far right. And I should have asked, is there anybody else that you want to have copies of this? Or okay, in the back there, if you want to pass it. Thanks, Brad. We've got some extra copies. So, okay. So for the 2012 plan year, which is over to the far right here, it's going to be the July 1st, 2011 through June 30th, 2012, the health insurance plan that ran through that time frame. And also for claims that were during that time, that happened through the end of last year. Sometimes it takes a little bit for providers and hospitals to submit their claims. So again, this is the summary for all of the 24 counties, and then ISAC's employees are also in the program. And then we'll get into your county specific information in the next slides to come. So we started the year with a beginning fund balance of $22,218,896.46. Now that's that health insurance fund that's built up over the 30 plus years that the program's been around. All the counties have contributed to that. ISAC can't just use that for anything. They have to use it for health insurance purposes. A couple of things we've spent some of that money on lately, some of the wellness programs that we've rolled out. And then this year there'll be some healthcare reform fees that ISAC will be paying on behalf of the counties, and we'll talk about that here in a little bit. The revenue that's come into the program is the next section of the Excel spreadsheet here. County premiums obviously being the biggest portion of that. This year the 24 counties and ISAC's headquarters paid in $22,510,480 in premiums to the program. COBRA premiums, that's for county employees that have left employment and choose to have federal continuation, so they pay those premiums direct to Wellmark. That amount was $20,748.65. The checking account interest was $512.58. Investment interest, so that $22.2 million does get invested each year in low risk securities similar to what a county would do. Obviously interest is down this year. We all know that that's the case across the board. So this year the interest did amount to $386,639.63.
It's kind of interesting to see that checking account interest in 2007 was $56,000 and last year was $512.
Things are working a little bit differently this day and age, isn't
Why,
it?
yes. Wow.
Let's see what happens in the next 5, right? The stop loss credits, the ISAC program is what's called self-funded, meaning they pay their own claims and then they establish a premium rates for all the counties. We don't, though, take on all that risk. We have purchased stop-loss coverage from Wellmark, if you remember. For each individual that goes over $100,000 in claims, we're reimbursed for that. And then also, if our claims would go 10% over the underwriter's estimate, we would be reimbursed for that. So, that said, the stop-loss credits are for claimants that went over $100,000. This year, our credits were $1,141,747.70. Compared to last year, if you look back, that number has dropped significantly. You may think, well, Wellmark's paying those claims, so it doesn't really impact us, but it does because our premiums are a function of those claims. So it's good that those numbers have gone down. We can't necessarily directly correlate it to wellness, but it certainly speaks to the fact that we have less folks that are at that escalated level, which is a good thing. So. Subrogation credit, that would be for other insurances being responsible for a health insurance claim that went through our program. We got a small amount back for that this year, $428.35. And then lastly, pharmacy rebates of $191,063.03. With our agreement with the pharmacy benefit manager, they pass back through credits that we get for drugs for name brand drugs that have rebate amounts. So total revenue for the year was $24,251,619.94. The next section is the expenses that came through this year for the program. The biggest of which at the top is the paid claims. So for all of the ISAC employees, the county employees, their dependents, there were $21,572,747.62 in claims this year. That number is net of any discounts that you're going to get at hospitals and doctors. Also net of those large claimants, those $100,000 large claimants, because those aren't our responsibility.
It's really going up over the last few years.
Yeah.
Since 2006, it's almost double.
Yeah. And there's been a little bit different enrollment since that time, so I think we've had a couple more counties come in the program, but you're absolutely right. Certainly it's gone.
So you're dealing with more people.
Correct. The Wellmark administration fee for Wellmark is the insurer to be the third-party administrator to pay the claims and everything that goes along with that, $591,138.01. The network access fee, so we talked about the discounts. The discounts each year amount to about 45% off the billed charges. To get access to the Wellmark Iowa discounts and the Blue Cross Blue Shield nationwide and international discounts, we paid $274,181.26. The pharmacy insight fee, we do have Catamaran, that's a vendor that looks at all the pharmacy programs and puts all those guidelines in place to be able to do business with them. They charged us this year $40,830.08. The disease management and the wellness really go hand in hand. The disease management's a program that's been around for a long time. Nurses call out people with chronic conditions to make sure they're managing those things. Diabetes, asthma, to name a few. This year that cost was $86,780.07. The wellness program, close to about $400,000 this year. You obviously know we've been doing the incentive for the past few years, so this was the year where that $250 gift card hit, which is why that's increased, the $400,000. Again, if you remember, we just talked about that large decrease in those large claimants. Certainly that we think that investment's a good thing, at least after some of those preliminary numbers have come back. The state reinsurance pool payment is a function of our claims we pay the state each year to help cover uninsured individuals as a health insurance plan. This year that amount was $114,860.11.
That's state law mandatory?
Correct.
Okay.
That'll probably go away here.
That would be my guess. Not at this point, so, yeah.
Come July, though.
Yeah.
That was going to be foreseen, and then whenever the Affordable
Health
Care
Care
Act was
Plan.
kick in,
Yeah, that would be my guess.
everybody's supposed to have their own policy.
Yeah. Do you know anything about that?
I haven't heard anything.
But the governor doesn't want to go with it, so.
Isn't that interesting?
The Medicaid expansion is probably what you're thinking about, but there's a lot of different moving parts to all of this. It's a big animal, so we'll talk about some of it here in a minute. The stop loss premium, so again, we talked about those credits up above in the revenue section, pay Wellmark a premium for those coverages. This year, our premium was $1,435,499.27. The accidental death and dismemberment insurance premiums, each individual employee that's covered under the program has a policy that's associated with the program that they get. That cost for that program this year was $35,016.26. The finance charges for the account that ISAC uses to pay the claims, $2731.17 this year. The AD&D administrative expense was $2839.18. ISAC's royalty or ISAC's charge for administering the program was $260,000. And lastly, we've got a couple more line items. The second to last item is actuarial expenses, insurance division, $1,050. They do contract with the actuary to look at the financial status of the plan to ensure we're doing everything correctly, that the Department of Insurance is okay with what we're doing. And lastly, the investment management and miscellaneous expenses. Wells Fargo is the investment advisor that we use to manage that $22.2 million fund. This year, the cost to administer those programs, those investments was $44,329.49. So total expenses this year were $24,860,052.28. We had a net loss of $608,432.34. We ended the year with our fund, our health insurance fund, that'll carry forward into next year at $21,610,464.12. I think if Bill Peterson was here and Brad tell me if you disagree that ISAC generally tries to run the program plus or minus 2%, so certainly not outside of what we would expect. Okay. Any questions on
What's the
that?
loss ratio number?
That's going to be the expenses to the revenue for the year. So it's looking at where our expenses over the revenue that came in.
So 100 would be.
Correct.
And
That's
if it's
exactly
above,
so.
that means your expenses were above.
Correct.
The premiums, if it's below, they were.
Underneath. what it
So
is.
that 608,000 actually made it 2.51% more.
Correct. Yeah. Exactly. Page 3 shows for 2012 for the fiscal year, that same time period that we just discussed for the whole group, shows each individual county and where their claims and expenses and premiums fell for the year. It shows your actual loss ratio for the year over to the far right. So if we go across the page for Mitchell County, you're about halfway down, a little bit lower than halfway. This year Mitchell County paid in $580,906 in premiums. The next two columns are going to be your expenses. The first one for claims that were between those July through June time frames, $551,123.53. The next column is your expenses that for services that were incurred during that time frame but paid afterwards. We had a few come in late, $12,499.53. If we add those two columns, we get to our total expenses this year of $563,623.06. Compared that back to the premium that was paid in, and we were close to about $17,000 over. So when we take the total expenses divided by the premium, just like we did with the overall group, we have a use rate or a loss ratio of 97% this year, which is better than what we've seen.
Yeah, way better year than
That's good.
last few.
Than what we've seen historically.
For us.
Yep.
We're going the right way anyway.
That's a good thing. So page 4 just shows projections going forward. Bill puts this together just to look at when we project out how much money are we going to need to collect, and that's how the board looks at the premiums and those types of things. So we won't go through this in detail. They're just kind of inflated based on what we've seen in previous years. 2012. That column's going to be the same information we just reviewed, and then 13 and 14 are going to be the years that are projected. The claims, he's projecting to go up about 3% in those two time frames, and I will tell you the average, the Wellmark average is about 6 or 7%. So we're under kind of where the trend's at, which is a good thing. At the very bottom of the page, the only thing else I'll show you is just that as we look at that reserve, we talked about that $22.2 million that we've accumulated over the 30 years. In 12, or in 13 and 14, at the bottom of the page, you'll see the ending fund balance, that there's kind of a range depending on where the claims fall. There is some additional liability. So again, as we look at the ending fund balance and you follow that across, the numbers right underneath that, the annualized IBNR and the maximum additional liability. The IBNR is the incurred but not reported. Those are claims that come in after the fact, so we can only estimate what we know about in that time frame, and we know there's going to be some that come in after the fact. So those are additional liability. And then also that 10%, so we're covered 10% over the underwriter's estimate when Wellmark would kick in. But if we had a year where we went 10% over where the estimated claims were, we would be on the hook for those. And so you can see how, depending on how those numbers come back, we could potentially buy our reserve down to in 13, 15.5 million, and 14, 14.8 million. But again, that's the value of having that reserve over that long period of time, is that we've got money that we can pull from in those worst case scenarios. So overall, obviously we would expect to balance to the numbers at the top, but we do have some additional funds in case we need to plan for worst case scenario. Any questions about the financial outlook?
Where do our total potential net reserve, where is that numbers to be? I mean, what's the, how much should you have in reserve, I guess is what I'm trying to ask.
Yeah, that really varies, and there are auditors that typically come in and look at that, and I think ISAC hires somebody every year to look at that for the reserves.
Yep.
I work with private and public entities, and typically with public entities, you want to keep a larger amount of money, obviously. So we hold about 100% of a year's worth of claims. It's about 60% of our total expenses, if you look at it. So we're certainly within a healthy range, not over or under where we should be. Do you have any other questions?
Some boards that, they like to have 3 months operating capital, and stuff like that. So I just ask them.
Do you have any other comments? Okay. All right, page 5. This is the review of all the plan designs that the program has in place. So Plan 11, obviously, pretty much in the middle of the page is where Mitchell County is at in terms of the current plan that you're on today. Spoke to the fact that we have a new plan, Plan 11B is the one right to the right of Plan 11. So that plan, if you look at the health insurance benefits, which is the first half of the page, they are the same as what they've been in the past. It's that $2,000 deductible, 20% co-insurance, to a maximum out-of-pocket of $4,000 per single. What you'll notice is with Plan 11B, as you go down halfway down the page, you'll see the prescription drug program. You'll see that with that Plan 11B, there are different co-payments. Currently for our prescription drug program on Plan 11, we have a $10 generic, $20 name brand, and $45 non-formulary copay level. And as we've looked at this program, gosh, we've met how many times? Several times over the last year. Pharmacy costs have gone up is kind of the bottom line. It used to be that pharmacy was about 10% of the health insurance costs. It's now up to 20%. We've done a whole bunch in regards to generic utilization, and ISAC's done a really good job. All the counties are at about 80% generic, but we continue to see more higher cost drugs come onto the marketplace. So this is a new option that will help combat those costs and help sustain the pharmacy program in the future, but it's certainly not something you have to do. So with this program, and it's outlined here at a high level, your employees would have a $10 generic copay still, but their name brand and their non-formulary would be at 20% to $40 for name brand and 30% to $50 for non-formulary. Not a huge difference, but enough to make them think a little bit about those costs. If they're going to be paying a portion of that, a percentage, versus a flat copay, they might think a little bit about other options that are available.
Or whether or not they even want them.
There you go. They need it or want it, right? Absolutely.
It goes the other way too.
Sure. Sure. The other big difference here that's not necessarily outlined, and if we have interest in this program, we can go through this in more detail, is just that there is a new classification of drugs within that Tier 3 that we've determined to be limited value drugs. So the program that you're on today will continue to cover all FDA-approved drugs, but this program will exclude some drugs from being covered. Those are drugs that have generic and name brand Tier 2 level options available today. So for the counties that have been interested in this, I've gone back and I've run reports specific to your county to say how many people would have been impacted if we look at this program for 2012, and then also how many drugs would have been impacted. So I don't know where you're at with your union contracts, or if this would even be an option, or if it interests you, but we could certainly run the numbers if it's something that would spark your interest. If you see the premiums at the bottom of the page, the base rates for this upcoming fiscal year 2014, it's a difference of about $12 on the single and about, actually I gotta do the math there, about 19 on the family, yep. So it's 2% difference in the premiums. A lot of counties have said, well, that's not a lot. If you look at the pharmacy program as overall only a portion of the plan, that's why there's not a huge discount. But really what this is for is to prevent costs going forward as we see more drugs coming out that are higher cost. So is that something that would interest, well, you or the board?
I don't think so, because again, to fight the union for this amount of money or
Okay.
that way.
Yeah, the cost really isn't that big a savings, I don't think.
Okay, sure. Okay,
Yep.
all right. Page 6 shows for Mitchell County your historical utilization. So we talked about this year's premium versus claims, and again, this goes back to 1999 when you joined the program. You probably remember, we've talked about this in the past, that ISAC takes 5 years worth of your claims in order to determine your premiums. So if we look back, 2008 through 2012 is going to be the time frame that we're going to look at. We're going to average your loss ratio over that time frame in order to get to your rates. But it also shows clear back to 99 what your premiums and your expenses have been. If you look at 2008, 2009, 2010, 2011, again, we had a year in there where we were at 100% of 2010, but this year certainly has been much better than those other years, so we've been helped out a little bit by the positive improvement this year. Our 5-year average at the very bottom of the page is 113%, and that's the number that ISAC again is going to use in order to calculate our premium rates. Okay. We flip to page 7. This year, this is the individual county expense breakdown. So again, we went through the premium, the expenses, the totals, but this breaks it down to some of the other fees that we went through in the larger analysis. You can just see for at the bottom for your average contracts per month of 87, the annual cost per contract is $6,478.43 compared to ISAC's average of $11,815.61. Page 8 shows all the different plans. We just reviewed those, but these are all the different premium amounts that you could potentially be subject to. So for Plan 11, again, the base rate would be if you're paying the ISAC average. There's level 1, level 2, level 3 discount up to 15%, and then level 1 and level 2 penalty up to 10% over and above what that average rate is. And at the very bottom, if you look at the level 1 penalty, that's where we're going to fall at Mitchell County. Our 5-year loss ratio is greater than 110%, but less than 120%. We're getting close to that 110. We're at 113 this year. So it would be possible that next year, if we have a good loss ratio, we can move into that next category, which would help us out. So the level 1 penalty in Plan 11, you see that the pricing for your single and family premium is $587 and $13.14 per family. I'll show you at the very end the actual increase. And this is not inclusive of the wellness discount as well yet. We don't have those final numbers yet. So the next page, page 9, shows for all the counties what the discounts have been. Previously, we've got fiscal year 12 and 13 on here. So a lot of these numbers we've already reviewed, but for Mitchell County, smack down to the middle of the page, if you trace it over to the far right, you can see in 2012, we were actually at the base rate. So again, we were paying that base rate then, but we jumped up in 2013 to that 5%, that first level of the penalty. However, we bought that back down because we had a 4% wellness adjustment last year. So we only paid 1% over the base rate. And then this year we're back up to a 5% increase over the base rate. But again, we can buy that back down with the wellness adjustment. halfway down the page, Mitchell County again, for Plan 11. This shows your actual rates and the actual increases for this year. So for Mitchell County for Plan 11, if you follow me across the page again, your fiscal year 2013 discount or penalty, you did have the 5% penalty. The next column over with the wellness discount, you only had 1% over and above the base rate you were paying. So your premiums last year, or what your current premiums are, $536 for the single and $1,201 for the family. Last year our increase was plus or minus 7% depending on the single or family. This year with our 5% penalty again, and before the wellness adjustment we won't have those numbers till May, we're at $587 for a single and $1,314 for family, or close to about a 10% increase. But again, we can get that back down up to 5% depending on the wellness participation.
Budgeted for.
What'd you say, Walt?
So that's, rates are higher than what we had budgeted for. But depending, so we, like last year, we found that in May, so.
Yep, yep. And actually, we have a conference call with the wellness committees this afternoon. One of the pieces of feedback from them was just that they wanted to move this program to more on a calendar year, and that'll help you as an auditor and the board, because then we'll be getting our final rates earlier in the process. So hopefully,
Was there something that wellness is supposed to be doing? I mean, participation in this wellness program, is that part of this?
yeah.
It will help reduce your premium.
Well, we need to send a memo out to everybody that, you know.
Let's put in there, they're not allowed to get sick.
Look at the camera on that one. The
That's why I'm
deadline,
sitting behind you.
yeah. The deadline for this year's program that will still unpack the discounts is April 15th, that they need to get their forms in. So certainly let me know if we can, yeah, so you can still get your form in, but you had to do your preventive service by February 28th. So good to go out and get that information to them, because we can get up to a 5% discount on your premiums for that. So. The last page in the presentation just shows, again, this process gets started clear back in November. ISAC's Board of Directors meets and approves the increases. This year is December 13th of 2012. They approved a base rate increase this year of 5.59%. They adopted the discount proposal with loss of the discount limited to 5% per year. And then Plan 11B was that new pharmacy program that they decided to try out this year. Any questions on that? Since we're kind of doing a shortcut, I'm going to direct your attention to the left side of the folder. There's a PowerPoint with more information on healthcare reform. We did a session at the spring school, myself and another guy from Wellmark. And we'll make sure Lowell and Dan are up to date on all this, but I wanted the board just to have a general idea of some of the things that are coming down the pike. How am I in time, Will? Do I need to cut me off here? I'm okay?
We're good till 5
Got all day.
Till 5 o'clock? Okay. I'll be here a while, all right. So this page is the overview of the different provisions that's going into place with the healthcare reform bill. On the front side are the changes that have happened in 2010, 2011. We've already implemented those changes. You probably remember kids up to age 26 was one. We took out pre-existing conditions for kids under age 19. They're listed here, but I'm not going to go through them in detail. Just wanted to remind you of some of those changes. One of the decisions that ISAC made early on, there was this whole concept with health reform of grandfathered versus non-grandfathered plan. Just to remind you of what that means, grandfathered plans, and you see the checklist over to the right with all these different provisions that had to be put in place. Certain plans could avoid if they kept their grandfathered status, having to put in certain provisions of the bill. One of the biggest ones in the first couple years was preventive services. You can see that about halfway down the page. Preventive services, certain services had to be covered at no cost to members. And of course, ISAC already had that policy in place, has had it in place for a number of years. So because that didn't really have a cost impact, we decided to move into that non-grandfathered status early on, so we didn't have to administer 2 different plans for every different option that we offered. So we are considered a non-grandfathered plan for healthcare reform, so that's something that comes up in any year meeting just for your information. we flip over to the back side of the page, these are the things that are gonna come into place in the next couple of years, which again, I wanted to really at a high level just kind of walk through them. So they'll be implemented in 2012 going forward. You may be thinking, well, 2012 is coming on. However, the bill, the way that it's written, certain things go in on or after a certain date. So for example, the first provision here, women's preventive service, that was on or after August 1st of 2012. Of course, our plan year is of July, so that won't go into for us until July 1st, 2013. You probably have heard in the media, in fact, I just saw a commercial the other day that was advertising this, that some of these were women's preventive services. So today we cover a lot of preventive services at no cost to members, but there's some additional ones with the bill, one of which, the most highly publicized, has been contraceptives. So today obviously we cover contraceptives. Individuals, women go in to get their prescriptions at the pharmacy, they pay their copay, and going forward with Health for Home, they won't pay anything for Tier 1 and Tier 2 prescription drugs, so that's a big change this year. There's also breast pumps will be covered at no cost. There'll be some domestic violence screenings, some STD screenings, so that's that change this year, and that's all, the cost for that is figured into your renewal already. The summary of benefits and coverage, I know I've already talked to Pam about this. This is a new document that the government's put together. It's supposed to be easier for all of us to understand our benefits. It's an 8-page document. It's a short one, but so this basically outlines deductibles, co-pays, co-insurance, all of those things. Regardless of if you had Wellmark as your carrier, you don't have it, I'm sorry, I should have mentioned that. I'm going to give this to Pam. But regardless of who the insurance carrier is or who the employer is, everybody will get this same document. So Wellmark's providing these, but with your partial self-funding, you'll also have to get with that carrier because these are just based on that Plan 11, and then the partial self-funding carrier will explain those benefits in a separate document. And there's penalties for not giving these out, so we'll make sure Pam knows that she has to give them out at renewal and then also to new employees going forward. So it's a new requirement that you'll have to have it. Do you have a question?
Yeah, what about our, the landfill, they're also on this plan. Now, how do we have to treat those folks? They have to have that same,
Yep.
you know, they, landfill just pays Metro County for their coverage.
Yep.
Cobra people too.
Okay. So how do you just give them information today? I'm sure you have to give them like the premium rates and all that, or however.
Yeah,
So-
because they pay us
Okay.
individually.
So I would say we
Need to
actually
give
have,
them.
yeah, exactly, and they just need to know that they need to get this to their employees as well, just like other documents from a health insurance perspective. There's some fees that are involved this year that we'll talk about here in a little bit. The first one is the Patient-Centered Outcomes Research Institute fee. It's the next one listed here. $1 per member per year moves to $2 in 2013. We'll talk about how ISAC's handling that here shortly. This year, there's W-2 reporting requirements for employers that have more than 250 employees. You actually have to show the value of health insurance coverage on the employee's W-2. And we have more than 250 W-2s, so that doesn't apply to us. There's been some talk that this might be expanded downwards, so that could be in the future. The flexible spending account, medical limit, you guys use us for your flexible spending account.
See where that's going.
Yeah, it's going to 2,500. That'll create some additional revenue for them as well. You can't do as much in your pre-tax health expenses there. Notice of the exchange to group employees. I want to make sure you knew about this. This is originally they said March 1st that you'd have to get this to employees. It's now going to be summer, fall 2013. Really what this is letting employees know about that exchange. You've heard about that. That's where all citizens can go out and buy insurance on the internet. Governor Branstad said we're going to partner with the federal government so that we get the IT infrastructure from them. However, we're going to make the rules and run it on a regular basis. So if your employees can go out to that exchange starting this fall, they'll have coverage January 1st. However, if you provide a plan that meets the requirements, they wouldn't be eligible for any subsidy or credit out there on that exchange. So they might go out there and look, but they're not going to get any credit, and if they do choose to buy insurance out there, you wouldn't be penalized. They wouldn't even get access to your employer contribution. So we'll talk about those requirements here shortly, but that exchange notice will have to be given out here this fall. We're expecting the Department of Labor to have a model notice that you'll be able to put your information into. Patient-Centered Outcomes Research Institute, again, that's also in 2013. 2013, there is the elimination of retiree prescription drug tax deduction. That's only for groups that cover retirees over age 65, which I don't believe you guys would cover retirees over age 65. So.
Well, let's say there's somebody with a COBRA.
Right, so that you're not providing that coverage to them, they're paying for it, okay. So the last piece that I just wanted to share with you, and obviously there's other provisions in the future, but I'll be back to talk about those next year, so. Yeah. So this year, the employer shared responsibility, that's the rule that any employer with more than 50 full-time and full-time equivalent employees are going to be subject to a penalty if they don't provide health insurance coverage. So there's a no coverage penalty. If you don't offer any coverage and one employee goes out to the exchange, you would be charged, the IRS would bill you $2,000 per individual. You'd be exempt from the first 30 individuals. You also have to provide what's considered adequate coverage. So if you don't provide adequate coverage, there's another penalty for that. And what's considered adequate coverage? It's when your plan meets a minimum value of at least 60% and the employee contribution is no more than 9.5% of their annual household income. I'll explain that as clear as I can, just to give you a summary of how that works. So really they're saying in order for you to meet the requirements, you have to have an affordable plan, the premiums have to be affordable, and the plan has to be affordable. So the cost that's coming out of their paycheck can't be any more than 9.5% of their annual household income during the year. And also the health insurance plan has to cover at least 60% of the cost during the year. So if I had $100,000 in costs this year, the most that I would pay out of my pocket would be 40%. The health insurance company would have to pay 60% of those costs. So if I meet those two requirements, my plan is fine by the law and we wouldn't be subject to any penalties then. So Lowell, tell me, do you guys have a contribution for employee premiums today, or do they pay anything for their employee premium?
Single is covered, just the ones that take family.
Okay.
Pay a portion of that.
So that 9.5% is in regards to the employee premium. So again, you've met it, because if they're paying nothing, they're far below that 9.5%. And that 60%, that plan paying at least 60%, we don't yet have how that's going to be measured. There's things outlined in the law, but they haven't released those. What our actuaries have said is you'd have to have a pretty high deductible plan in order to meet that. If you think about the plan and how it works today for you, if you're on the program, we know that it covers more than 60% of the expenses. So I say that, I mean, obviously I'm not an actuary, I can't certify it, but my guess is going to be we're going to be okay. So more to come on that. We'll keep you posted on how we'll measure that when the IRS, when the government comes out with all these calculators and tools. So there's future provisions on here. There's, all the way down to 2018, we've got different things that are going to go into place to that time. Most of these future provisions are proposed regulations at this point. They're still getting comments out there. So I won't go through those in detail, but again, if you have any other questions for me related to healthcare reform, happy to answer those as well this morning. That's all I had for you.
Any questions?
Provided employer forms for meetings and they'll do that
Yeah,
this year.
yep, we can do that.
And maybe talk with Pam on that, but she is even full-time 40, full-time 30.
Okay.
That's when we're having our annual.
Okay, I'll just talk to Pam about that.
Usually we do different colors, so it's.
Okay, perfect. One thing that I forgot to mention, and when you said this, I just reminded you, you do have to cover with the law employees that work over 30 hours. That's part of the requirement. And you already do that today, but that's not sure.
No, but I mean, we heard that
Okay, you know
a
that.
month ago, yeah, that, so anybody that be seasonal or.
How does that work with the seasonal employees?
So with the seasonal employees, technically within the law, you'd have to look at their hours each month and take them on and off the health coverage. Now, the government did offer a safe harbor, and they said that you could actually look at a longer time period to measure their hours. So for any seasonal or variable hour employee, you could look between 3 to 12 months. You could do a look back period of 3 to 12 months to measure their hours during that time frame. And then you'd have to offer that coverage for the same amount of time going forward. So I'm simplifying it. It's a little bit more complex than that. But what that allows you to do is for seasonal employees, you average it out over a longer period of time. So some counties have said that's how they're gonna kind of get around that. And if
But you
that's,
might have like during the summer, or you got your extra help during the winter for balance.
It's the winter time I'm really concerned
Yeah.
about.
some of the boards of supervisors I've met with have said, you know, we're gonna put a policy in place that we're not gonna have part-time people that are gonna work more than 30 hours, because if you look at a county organization, I guess as I've had these conversations, you've got lots of different department heads, you wanna make sure everybody's administering this correctly so you don't get a penalty in the mail from the IRS, those kinds of things. So it's really up to you how you choose to administer it. I mean, you could decide to cover any employees that are working 30 hours, but obviously that would add cost to your budget.
That's 30 hours per week, right?
Correct, an average of 30 hours, yeah.
But in a 3-month period, I mean, you could have maybe 3 weeks where they ran 50 hours and 7 weeks they ran none because we didn't have any snow. So I mean, still you'd be under that 30 hours or whatever.
Right.
So kind of bridge.
Well, I'm
Especially if
trying
you
to
ran
think.
monthly on a 30-hour average, you'd be fine. But you could, I mean, if you wanted to, actually in this presentation, I can point out to you guys, let's see what page it kind of overviews that calculation. It's still simplified, and I could certainly send you the detail, but it is on page 12. I think those are numbered separately there. So yeah, so page 12, counting full-time employees. So again, I talked about, page 12, it looks like this. Oh, clear back and rec, they're both, they're numbered separately. Sure. Right here. Yep, yep. So this kind of outlines the process that you have a standard measurement period, that green circle over on the left. It can be from 3 to 12 months, excuse me, that you obviously then are counting the employees' hours or through your payroll system or however you would do that. You could then have an administrative period of up to 90 days where you calculated hours and offered them coverage, and then you'd have to, the stability period, actually give them the health insurance benefits for no less than 6 months, it's over here, or up to the same time frame. If you were measuring their hours for 12 months, you'd have to give them coverage for 12 hours.
Our union contract is 700 hours per fiscal year, maximum hours. Does that apply then, where we can just assume that 700 hours is spread out through 12 months?
Not that's in the regulation now. You could certainly go to the IRS and comment on it, I'm sure.
Good luck there.
You know, the best way that, it's up to you. I mean, you could do this measurement at the end of the time frame, you may determine you have to cover people, or you could just say in a given month, you know, nobody's gonna work over 30 hours on average. Like I said, a lot of boards I think are going that route just because it's kind of safer, but it's absolutely your decision, so.
Well, most of our guys are on call. If we've got the snow push back, they usually don't come, we don't call them back. We're trying to control our hourly costs too, or just our
Sure.
labor costs.
Sure.
What about summer, the mowers and?
We can, I don't know, we get a route done if we had, depends on how many guys we could get to mow, or maybe they get around in and they wait.
You hire an additional person, I mean, there's some.
Well, we usually have about, depending on the season, we can get about 3 part-time guys in to mow. Our seasonal people just run our mowers, but if they get a route in, if they get their hard surface done, you know, they wait, I don't know, a month, and then they come back and do a second mow. Just all depends on how fast the grass is growing, and
Rings and,
something we'll have to look at.
is that correct? It starts in October, or does it start sooner than that?
So it's January 1st, 2014.
Or 14,
Yeah, we're
okay.
gonna have to meet that requirement. I did forget to mention, one more piece, and it'll take me a minute just to touch on this, but there's another handout, it's 2 pages that is on the left side of your folder. And these are the fees with healthcare reform that are coming out. The good news is ISAC's determined that they're gonna pay these fees out of the health fund. So really, in this first year, you don't have to worry about it. Yeah, thanks, Brad. Thanks, Bill. Back into mine. But just for your information, the first page, these are the fees that ISAC's subject to as a self-funded plan. We talked about that Patient-Centered Outcomes Research Institute, that's the first one. Over on the far right, it shows what the cost is. It's $1 per member per year in the 12-13 plan year, and then going forward, it's indexed up. That's obviously a small amount. But this transitional reinsurance fee, that's the next one down, it's actually $5.25 per member per month. And that's not just on your employees, that's on dependents as well, and spouses that are covered in the program. So it's $63 per year for every covered individual on the health plan that we'll have to be responsible for in 2014. So that, again, will be paid for by ISAC this upcoming year, and then going forward, they're going to include it in the premium rates, is my understanding.
Well, well, I'm chairman of the landfill out there, we get, this is the same insurance, but our third-party administrator now, they want $250 a year to administer the plan over and above, plus, you know, the $650 per employee. So, what's changed?
I mean, I couldn't tell you.
No,
I
I'm
could-
just
I
saying,
mean,
I'm
there's,
thinking
yeah.
there's too many holes here, people just slipping in another key to do what?
Yeah, and I didn't explain what they are, but I mean, there's different reasons for them that the government's outlined. Obviously, it's to help pay for this bill. These aren't Wellmark fees, these are fees in association with the Affordable Care Act, so, does that make sense? Yeah, I could have gone through all the detail and the explanation.
No, that's fine.
But yeah, we could get way into it. I mean, you're responsible for these two fees. There's several other ones, so that self-insured plan that you have in place today with ISAC actually helps you avoid some of the other fees, which is nice. Yeah, this bill isn't gonna pay for itself, so they've got some things out there that.
So going forward, we can just know that healthcare is gonna cost more.
Yeah, we could get into a long conversation, but individuals and small groups are gonna be impacted big time this next year. If you have people you know, farmers that are self-employed, their premiums are gonna be going up potentially substantially or going down. There's gonna be some variance there. Larger groups, believe it or not, are least impacted by this. So it seems like a lot. Certainly, I'm looking at this stuff every day, and
No, but what's the answer?
yeah.
You know, everybody's trying to take care of themselves, you know, implement wellness, but still keeps going up. I mean, when does it catch up?
Yeah. I think ISAC's doing a pretty good job compared to other groups, but yeah.
Yeah, no, I don't deny that, but I'm just. What are you gonna do?
Just like the other day, I went and got a little bank loan, and I thought 8% interest was plenty high, but they also had a $35 origination fee. And, I mean, it just doesn't stop. I mean,
You know what, we never down to your stand as a credit union, you know, sidestep all these banks.
Forms to sign.
I went the other day, and said,
Yep.
"Oh, sign with the-"
Nope, there's nothing to sign. This is just what's happening based on.
But I wonder if there's a couple other.
Yeah, there's ones, so I'm gonna give those to Pam.
Okay.
All right here, I got it all printed off,
Well,
it's in little tabs,
because I
so
didn't,
you sign.
okay, because
If
I
you
didn't
want-
see it in the email.
If you want me to leave it with you, I can before you sign it, but you'll probably put it on the agenda next week or whenever. Because these are the signed documents for the renewal. I'll go through with you.
Okay. Sounds good.
8%, yeah.
Thank you.
Because they said it was non-secured, whatever, but then they say it's the $35 initiation. Origination.
Thank you. Good to see
Thanks,
everybody.
Brad. Thank you.
Take care.
Do we need a
Let's-
motion to approve this renewal, or do we just?
Well, maybe we could approve those right now
Okay, that's just fine with me.
with our renewal.
As long as they're all here.
Yep,
Yeah.
we could have this, so.
I'll just give you the documents you need to sign, how's that?
Okay.
There you go.
So I need a motion to have the chair sign this, or?
It's for the annual renewal, right?
Right, and it's part of our annual. So either, either Stan or I can sign them, so.
Okay, well, I'll make that motion.
You can go ahead.
Okay.
Motion to have the auditor sign the annual renewal with Wellmark Insurance.
I will second that.
It's been moved and seconded that we sign the annual renewal. Further discussion. Hearing none, Morale.
Aye.
Volklander.
Aye.
Watt, aye, motion carried. Let's jump down to item 9, because we have a few people
It
here.
doesn't matter either way.
Approve joining the Upper Cedar Watershed Management Authority. We met last Thursday afternoon. I think we had a very good discussion. The map that I told you about, Rich, is right up here. With all of the various hucks on it and so forth.
There's no hucks on that one.
There is.
Oh, yeah, they're right down there.
Yeah.
They're a little closer. All right, I thought they were rivers.
Basically, if we vote to join and the Upper Cedar Watershed accepts us tomorrow night, then we can submit for trying to have one of these hucks as a demonstration model for showing how to control water and so on. Basically, we would have the soil and water people from Mitchell County be probably the lead on this. Obviously, there's things that could possibly fit in from secondary roads, which if, again, soil and water want to participate, I'd want you to work closely with them to come up with a program. It has to be done, I believe, by the end of May, or towards the end of May. It'll be approved by the executive board down there, which one they want to take it by the end of May.
I did speak with Dan yesterday.
Oh, okay. So, first of all, is anyone interested in making the motion that we join the Upper Cedar Watershed?
I'd like to say, first of all you people that were at that meeting, this is what I took away from it. There's no way, shape, or form in the future would they come to the counties to institute a levy for any of this. All this money would be coming from outside sources.
That's right.
Correct.
Okay, that's what I wanted to hear. I'd make a motion that we join the Upper Cedar Watershed Management Authority.
I will second that motion.
It's been moved and seconded.
Minutes too, so we got it someplace.
Further discussion? Hearing none. Volklander.
Aye.
Morale.
Aye.
Watt, aye. Motion carried. We have to appoint a representative and an alternate.
Well, I'm looking at the representative. I'd make a motion to appoint Stan Walk as Mitchell County's representative to the Upper Cedar Watershed.
Be the alternate.
That's fine. You want to be the alternate?
I can if you want to.
Yep. You guys are in the rural. We don't have a whole lot of flooding in Osage.
Okay.
So
And you want to make a,
I'll make and the motion also to include Bob Morrell as the alternate.
do we have a second?
I will second that motion.
It's been moved and seconded that Stan Walk be the representative and Bob Morrell be the alternate. Further discussion? Hearing none. Volklander.
Aye.
Morrell.
Aye.
Walk, aye. Motion carried.
Thank you.
Is there anything that the group wants to?
I think we were just here for a resource if you had further questions.
Yeah.
That's good.
And Osage joined last night.
Yeah, we'll see. Find out what's on.
And again, basically, soil and water, I think you probably have some ideas on what you would like to present. County will be more than glad to work with you on if we should be holding some joint meetings or that, you'll have to let us know. We can, do you guys normally meet during the day or night or?
Well, it kind of varies.
No,
The next one's at night.
during
During
planting
harvest
season, yeah, it's planting and harvest, it's at night, but in the wintertime, we meet during the day.
Unless we have a conflict, we normally are flexible.
Okay.
Now we just need to get some rain and try something out.
Yeah.
Let us get them built first.
Oh, yeah, I'll do it. Pray for hard. Yeah, don't pray too hard.
Yeah.
Not for rain. Wait for a bountiful harvest.
Well, let's hope something will work out in the future, that we don't have those, you know, when we do have a large rain event, we don't have to see everything float away or get washed out, or,
Yeah, that's kind of the whole idea, is to buffer the whole system so that the floods are not as severe.
just driving around, I kind of start eyeballing different areas, you know, how would this work, you know, back it up here a little bit, or,
That's the advantage of having a little time to do it. End of May is not much time. But we'll do what we can.
Rich, do you have any other questions right now?
No, we had a conversation yesterday afternoon about where things were headed. In my mind, for us, it's in its infancy yet for what secondary roads is gonna be involved in, but time will tell when things start going, whether.
We'll just have to keep communications open and kick some ideas around, and get a good proposal put together, so.
Well, when you choose a hop, do you want to let us know, or?
Yeah, you bet. We're in the process of sending out a survey, so we've got two prioritized right now, Rock Creek and Upham Slough. We're going to send a survey out to those folks and see what the interest level would be, because that's a key part of this, is to know that we've got enough interested people to get projects on the ground or practices on the ground, so we'll let you know.
Okay.
Keep you posted.
Very good, thank you.
Thank you.
Thank you.
sorry.
Yeah. Well, Larry Weber's, I mean, he's good. He's gonna be a resource. You stay in the corner.
Is there a reason?
Yes, you stay in the corner.
What's the reason?
Because I've said that, that's where you sit. We are allowed to do that. You want the letter from the county attorney? I've asked him to send you one.
Yes, I would like the letter.
We'll ask the county attorney to send you one, shortly. County engineer.
Good morning.
Morning, Rich.
Morning.
Unless your updated map wasn't updated for pavement, so.
Hanging on the wall.
Replace that one. Yeah, we didn't have some of these updated up on top of these. The numbers mean nothing to you, but they do mean something in the office when you say road number 40. We've got a history of the roadways with the services. So.
But just the year that.
But the year is also here, whether it's 1 minute or not. So we can leave that set here while we go through if we want to jump into the. I emailed you guys. I don't know if you guys got them or not.
Yeah.
If you printed them out, but I made a couple other copies and I just had a couple notes. Well, I forgot to make you a copy. Basically, what I've got put in. In my email, I did apologize. I've had my fiscal years messed up with. It's still fiscal year 15. It's when this job gets let. I was going on the assumption of fiscal year 15 construction, but what it ends up being is fiscal 15 year letting, which puts it another season out.
16.
It's federal dollars, so in December of, let's see, we're in 13 now. December of 14 is when the project is let, because federal fiscal year starts October 1st of 14. So, anyway.
Oh. It will
You
be
guys
wet
might-
in-
yeah,
it'll be
everybody
wet
on
in
the same
14
page.
for 15 construction.
It'll be a fiscally 15 construction. So it'll be in
Fiscal 15.
Year from July.
It'll be another season yet. I was planning, when I was looking at it, first of all, it was put as a farm to market project. It was going back and forth when Jim was here yet. And so they had it in to be bid this December, this coming December.
Oh.
It's gonna be another year yet before it gets bid. So what I've done is we've got.
Well, it will be good in fiscal 15.
It will be. It's where it's supposed to be.
Completed in
Fiscal year. It'll still be completed in fiscal 15 too.
Whose calendar year
Who's
is
fiscal
14?
15? Our 15 or their 15?
There's some overlap well, we start our fiscal 15 in July, they start their fiscal 15 in October.
Who's on first?
I don't know, who's on second. So, what I've done in the program then is looking at farm to market dollars and where we're at balance wise. I've taken Walnut and pushed that up for a bid letting in December of this coming fiscal year 14. Because that was one, if you guys remember, we took that out of the program to pay for the county line.
Right, Walnut.
So, I knew we wanted to get back and get that one done.
When's it gonna be in then?
I'm gonna bid it in December or January this next winter to be done next summer.
It'll be done in 14.
It'll be
Calendar
done
year
for calendar 14.
Okay, good.
So, fiscal year can't, like, there's too many years to, I mean, there's only one year. So anyway, with that, we've got this one in the program, and then Howard County is gonna be doing something with that county line bridge that we've been talking about for the last 2 years. We discussed using farm to market funds, we have that. I just ran in the email I sent you guys, I kind of made this spreadsheet. It was easier for me to look at it as a checkbook instead of anything else. So if this is right, I didn't change these numbers because we never know what they are. I assume they're going to be a little bit bigger each quarter. In a year they fluctuate, but quarterly you just never know. Sometimes it's more, sometimes it's less. So I just kind of run an average of where we're at for a fiscal year. So what I've got in here is, this year right now we've got this Hickory Avenue culvert, we've got the Howard County project, and then this road, which brings our funding balance down to 1.2 million. Running through all this stuff, when we do this STP project, we use local funds to pay our 20% out of the 80. That comes out of this next fiscal year 15 project. So we're running funds down. And what I've done is, this is just immediate right now. There's a lot of openness to where we're at. We need to really focus on what we're doing this year, next year. And then after that, you know, I know that I have some potentials in here for monument. You know, Monument's a fairly new road. I mean, we paved in '06, but we're also seeing some deterioration that I'm not liking. You know, the surface is tearing. We're getting a lot of truck traffic on that road.
Which one is that?
The one south of Stacyville from 218.
Oh, Monument, yeah.
Monument.
I noticed that here
So,
earlier this year.
what I've done is I've looked at our program a little bit and figured an overlay in there in fiscal 16 to use some farm to market dollars up, which will bring our balance down. Open to suggestion on that. I just was looking at pavements. I know Zinnia is bad, but when we look at traffic counts, Monument's got a lot more traffic than Zinnia does as far as ADTs. So, and I know Mitchell's got some, I mean, this road's starting to kind of deteriorate a little bit going west out of Mitchell. I know we've got other roads now, south of Osage, T38. Nothing we could do immediately on any of these really, because T38 is going to be more of a, we can look at it, I guess.
It's gonna be up.
It's going to be
Again this year, isn't it?
yeah.
So you gonna try for an overlay on that, or
Well,
bust it up and start over, or?
I would almost not want to. I've talked to the paving association with Worth County's project, and there's some options we have for overlays on concrete on concrete overlays.
Oh, really?
And really,
Would
the severity of the road is just down in that valley where the river is. That's the worst section through there. I know we've got some faulted joints through the rest of it, but it's only, I think that's only a 6-inch pavement, and I don't think there's enough structure there to start milling.
They can't mill her down.
You don't want to take a 6-inch and mill it, because if you start taking inches off, there's no.
Oh, just you know, with the joints.
Right,
are-
but you're taking, if you even end up taking an inch off, you've lost the structure at the joint where you
I
need the most.
suppose.
So, still a lot of evaluation there. I guess the thing is where we're focusing immediately. The next couple of years, we're looking at Monument or Walnut, and then the 460th or 465th and 470th. Those are the ones. STP dollars are going to be non-existent after this project. When we look at the forecast through NIACOG, when this project's done, our balance is going to be $35,000 in the STP fund. So it's going to take a good 4 years to build it back up to do a significant project again. So our STP dollar, we're back to being poor. You know, we had those TIP dollars in here, and thank God we had those, because if we didn't have them, we'd have a lot more roads to be looking at and trying to spend this money down. So
We'll be turning them back to gravel.
Talked to some supervisors in other counties that don't have those windmills, and they said they've been trying to get 12 miles of road done
in a year's time?
No, I mean, that,
Several years.
over several years, you know, pick out the worst road and try to get it fixed.
And we've got some other options. This one isn't completely gone yet, where we, and I hate the word to bring up the word seal coat, but if all we've got is a tearing situation on the surface,
Put
if we
a nice
get,
2-inch bubble patch like we did on those
well,
other.
I mean, there's options there. I mean, I'm not talking, we don't have to do a full-blown project here. I've got the money kind of budgeted for just in case, because who knows what it's gonna look like in fiscal 16.
Those roads we did those bubble patches on, well, bubble patches hung right in there.
Well, the problem you have on this one though, is you have a lot of areas where it's just really all, I don't wanna really say busted up,
It's
but
not
it's all
alligator
cracked.
yet, but it's in the wheel tracks, and that's the concern.
But, you know, it's,
Being it's an old state road, there's gotta be a lot of structure, so I don't know if it's just the surface that's deteriorating or something else, but you've got, a lot of it you see in the curves. And that's where you got your load shift, and that's where all the things start tearing. We do have some on the east-west stretch here where you can see the wheel tracks
Yeah,
too.
that's where I noticed it most, on the east-west.
So, I mean, who knows what it's gonna look like in 16, but I know we probably needed to get this one in the loop right away. We took it out of our program before, so I prioritized that one, but, you know, and this one was back in the schedule anyway. This is when the federal dollars are accounted for, that's when we have to do it. We could always push it back further, but, we're gonna be okay. That road isn't, it'll be okay for another season, 2 seasons, so. That'll give us some time to, what I wanna start doing is looking at some of these smaller structures on here. We've got guardrail, all they are is a snow trap. And I wanna look at them this spring and see if there's ways we can extend them. Maybe with, if they're smaller box structures or whatever with guardrail, maybe we can cut the handrails off and get some box structures in there, get them wider and get rid of the guardrail, because that's a pain in the butt when we're trying to plow. And every one of them drifts in.
Yep.
So,
It just catches.
it gives us a little bit more time to do some more things on here to get it ready.
Have you been on that little road going south of Carpenter there, down to, where's Carpenter? Yeah, that little 3 miles there.
This there?
Have you been on that lately?
Not lately, no.
I
But I know
was
it's-
on there last year one time, I thought that looked like it was starting to go.
And there's things we can look at. I mean, if we're, you know,
that one really isn't that bad.
Have you been on it quite a bit, Stan? I thought it was.
I mean,
something in it.
yeah, I mean, there's problems.
You know, by the
but-
time 16 rolls around, that's 3 more years.
and a
But
person
again,
looks
what
at
we
the
really
traffic
need
count.
to do is we gotta jump in
We'll
the
do
car
that.
someday.
Yep.
and,
Yeah, do that seal coat, make sure you fill the holes.
Pardon?
Make sure you fill the holes
Oh, yeah,
in the cracks.
sure.
Have
They're just gonna come
Have you
back
driven
through.
in Minnesota lately?
Yeah, they come back through.
Holy crap, it's like driving down a washboard, every one of their roads.
And I did have,
Up there, 7 going through Elkton.
and I guess back down further into fiscal year 19, you know, I was looking at S70, which is from Carpenter down to the county line, or to at least number 9. That's gonna be that's a pretty sizable project. That's gonna take some money, but that's kind of long-term here. We've got other things that'll probably deteriorate before then. That I just wanted to have an idea of where we were headed for major projects, and you know, there's Kirkwood, there's other projects there, but it's a matter of what we got for traffic on them. And right now, for the immediate future, I see these 2 are programmed. This is probably next, or you know, there's other spots. We've got years yet we can still program. The issue is the STP funding. You know, we got to have a certain time for that. We can always add farm to market when the dollars come in. So we're kind of locked in with STP right now. Farm to market, we've got some fluctuation. Bridge dollar wise, we're looking at, I want to get down here. This is the only one down in this little conglomeration of bridges that even qualifies for bridge funding. Everything else is going to have to be local. And
that's quite a bridge down there too.
well,
I mean,
this one down here has been replaced, and that's the big one. This one's, I think that's,
yeah, that little one, yeah, these 2 here, I mean, they're smaller ones. You'd almost think you could do again culverts.
right, and that's what I'm looking.
And if you had
It's
to,
not even
a,
like
The drainage areas are what are
I guess
popping
I
up
haven't
right
been on
now.
that.
anyway, that's where I'm
you
kind of
have more
massaging.
woodlands and that down there too, to, I mean, to garner some of that. And, well, in any event.
Something we're gonna start looking at here again.
And I realize we have to basically go with what we know, but I'll still say that in this next year, you're going to see that there's gonna be a project in here of 75 to 150 windmills.
Yeah.
That'll be a great boon for us if that
Why
happens.
don't you see the paper? They're gonna, put the big transmission line west of here, and it was in the, I think it was in the morning paper on Sunday, the big transmission line project that's going on. I mean, it's gonna start.
Where's that starting at?
Well, it's gonna, they mentioned Worth County, but
Well,
you see.
ITC is coming through with
Yeah.
another line, and they're starting just south of the Worth County line in Saragota County,
Because,
cutting diagonal up to, where were they headed?
Yeah.
Sioux County.
Yeah.
So it's kind of a,
but see, didn't they just upgrade those transmission lines going west? I mean.
yeah, up by the that was another
They said
transmission line.
there's so much of this wind power that they, you know,
They gotta get it out before they can
they
build more.
wanna get it on the line. you
Yeah.
know?
So,
They said once it's on the line, you can't tell whether it's made from coal or natural gas or wind.
That's right.
But I should cut that out, I probably still
Yeah.
got it, maybe I'll bring it.
Yeah, if you would, because
Yeah, I think it was in Sunday paper.
Yeah, it was Sunday paper.
Well, these were my ideas to go forward. You know, we really always focus on the next 2 years, because they're the ones that we can try to focus in on where we're at, so.
Should
That's-
we roll the dice and just go ahead?
We've got time yet, like I said, I wanna give you guys this early so we can look at it, because this is due to the DOT by April 15th. We've got some time to cuss and discuss over some things, but,
no, to get a couple of these bridges in here, I mean, basically, you can keep a lot of, I mean, there's a lot of grain that comes into Osage from even Floyd County.
Right.
And to try to keep it off of T-38, I mean, they don't, you know, a lot of it will go on the gravel road and that, but we got these restricted bridges here that.
that
if we
just saves
could-
our road. But no, you're right. We need to start looking at some of these other ones that are deteriorating, and maybe we can, maybe there are some, maybe with some of these balances in here, we can look at some, maybe farm to market funds might be able to take care of some of that, I don't know. But, I'm trying to keep our local dollars local, because we can't use farm to market, we can't use STP, we can't use bridge money to buy equipment, and that stuff's getting older too. So,
Well, and keep in mind, there's a potential project that we may need $1 million local dollars for.
I wonder where we're gonna find $1 million local dollars.
Well, we're gonna find
Do you have a bake sale?
We're gonna excavate Stan's backyard. Dig up some of that
So anyway,
cans he's got.
if you guys wanna look at this a little bit, like I said, the program is the big thing. The budget isn't much different than the county budget. I try to keep them looking the same, because it's easier to watch one budget that's, two budgets that are the same than one that's different than the other one. So that's.
No, until we really drive them and
But I think it's
Like I
a
said,
good
we
plan
can
to start
visit
with here for the year and the next year following, and then from there on, you know, we've got another bridge inspection coming up this next winter. Who knows what they're gonna tell us on bridges? So,
This is telling this road was done in 2002. I thought we always got about 15, 20 years out of an asphalt project.
more truck traffic.
All more reason to go to concrete, isn't it?
Well, the dollars given, and I don't know if I told you guys this, I was telling the board over there, the asphalt people came in and said you can estimate for the product alone to be placed, asphalt will cost you $50,000 per mile, per 1-inch lift. 4-inch lift, so using those numbers, a 4-inch lift of asphalt is $250,000. Doesn't include shoulder work, doesn't include traffic control, doesn't include paint. I took our project numbers back out of our overlays of our concrete, and concrete at the time was around $104,000 per mile for the concrete for a 4-inch lift. So you got $104,000 versus $250,000 for the same lift, and structural numbers on concrete are higher than structural numbers on asphalt. Now, one would say the ease of construction plays a part. You know, what about the delays to the traffic, you know, to the locals? You know, you can pave asphalt and get on it right away. Concrete, we're getting close. You know, we've had 30-hour opening times, which is really nice. But it all comes down to dollars. You know, we can get a, you know, okay, so fine, we can do 8 inches of concrete for the same as 4 inches of asphalt if you really want to put the dollars to it. I'd rather put 8 inches of concrete down than 4 inches of asphalt, but that's not going to happen either. I mean, we've got that much leverage in the thickness to say, okay, we can put 5 down and still be cheaper than 4 of asphalt. So
Now, on this Stacyville to McIntyre Road, Would you need to put 4 inches of asphalt on? Could you go with 2 inches of that?
That's the
that
thing.
10
We could-
million diesel axle
You know,
mix and
I think
better asphalt?
when you, and that's true too. I don't know. I think that was either a 300,000 diesel mix. I don't know if Jim said it was even 100. I'd have to look again at a $1 million diesel mix or not. We don't have to. I mean, we've got enough right of way there to do a 4 inch and not have to worry about a whole lot of shoulder construction either. Could we do a 2-inch surface overlay? Probably. If we're gonna, if you figure each lift, if you don't do a cold in place recycle on this, if you do 2 inches, you're gonna see those cracks back in 2 years. It's about a year per inch of reflective cracking.
Okay.
Now the cracking isn't the big deal, it's that tearing on the surface that's letting more water. We can seal the cracks. In fact, I've had the company that did this stuff last year was in last week, and we were talking about, I was talking about possibly even sealing Foothill south of St. Ansgar, because while the road looks fairly old, it's really not in too terrible shape yet. The oils are kind of breaking down from the UV, but really it's in pretty good shape for the traffic it takes. That if we can get in here and seal some of them, we can keep the water out longer yet. Maybe we can buy some time, no matter what they come up with for dollars.
It's only been the last couple of years that you really had the cracking. I mean, I was amazed how.
Well, I'm seeing a lot more cracking on Centerline on Monument this year too. I mean, it's starting to get wide, so I've asked them to look at that too. Past practice hasn't been to seal anything, but I think that we can try to save ourselves or buy some time with, you know, we only spent $25,000 in this corner to do all that. And I'm trying to do the new stuff first because it's got the least amount of cracks in it, and maybe we can save it. The older stuff might be a little bit too far gone where you're.
Doesn't hurt to test. You know, try something.
What I'm going to do in Worth County is I'm possibly thinking of, we've got a stretch up on the state line that's gonna be kind of a test for us, and I guess it's whatever, but I think I told you guys last time too that I might do a stretch of concrete with a 1-inch asphalt interlayer and a test with the fiber, or the fabric.
Over there?
Yeah.
Good.
Because we're still gonna have 105 to do sooner or later too. I mean, there's gonna be,
yeah, that's another.
so.
Yeah, that's not in the greatest shape either anymore. I don't know how many miles is ours, but we've got quite a few.
6 or 7.
I've got a lot more over there.
I know.
Yeah, you've got the big portion of work now.
At any rate, that's the program, if you guys want to digest it a little bit, but I think I'll finalize it too and get it ready to go. If we can have another discussion next week, I think, since it's due on the 15th, which I think is a Monday.
Yeah.
We'll probably want to try to, we'll try to want to approve it
Next week.
next week if there's any other changes, so then I can just submit it to the DOT and have that program and budget done for the next year. You guys asked last week about the Newman signs thing. That was kind of a new supplier in here. We wanted to see what the prices were. They're really close in price. We want to see what the quality of the signs is. That's what we went with the invoice, just to try it. Jim and the guy did contacted us, and for doing over, I think if you do 40 signs or more, it's free shipping. So that's what we did. We ordered 40 signs to see how they're going to hold out. So, talked to Mark Walk about the dump trucks when he was in here. I'd really like to get something settled on that. I just want to know that I'm doing everything legal, so.
Changing our ways, huh?
Well, sorry. It's my face in the paper, and I gotta sit in front of a judge and say it does. I'd rather have some good sound reasoning behind it, but, other than that, we're getting snow equipment taken off the machines. I think if we get any snow now, it's short-lived.
Hopefully. It's a little snow and rain on Monday.
So, they're gonna get thawed out here, and they should be heading out with the blades, and we're gonna start doing, last week we did some spot blading in the bad spots, but now I said start running the full routes, because everything's gonna need it.
Just on a personal curiosity, now I live down there at Cedar Village. We do have blacktop on those roads, and we really have no truck traffic, but I see there's a few spots that we're getting that spider web cracking in that. Does a 1-inch overlay do much at all, or?
It would depend on what they put down. I mean, you can use the 1-inch overlay to seal it off, and it'll give you that much more structure. But is there enough? Are you seeing in those cracks? Is it starting to rut in those cracks too?
No, not really.
Then it could be just deterioration and maybe a cheaper asphalt mix that was put down at the time. I suppose, do you get a garbage truck in there once a week or?
Nope.
Okay, nothing.
Nope.
Nothing goes in the river.
You know, if it's, if it's not a structural tear, I mean, you could get by with a seal coat too, but I think if you were gonna spend $50,000 per inch of asphalt versus $50,000 per mile of seal coat, I'd probably want the asphalt and the seal coat, but will it do much for you? Yeah, it'll give you a little bit more structure. It'll be hard to place, you know, you can do 1 inch, but you'd have to have a small aggregate in there to be able to lay it back. Any contractor's gonna tell you they wanna put 1.5 inches down, they don't want to put 1 inch down, but.
Okay, yeah, just give me some idea, because we'll be having our annual meeting later this month.
Overlay of concrete.
4 inches.
4 inches.
200,000 a mile.
There you go.
Rich, did you get a chance to look at that up at?
Was it his residence that he had a problem with up there? Is that where it was?
No, it's across the, okay, I went up there Saturday and videoed it, so I can stop out and show you.
Yeah.
I'll stop out.
Is it at the intersection then?
Well.
Because I know the guy's driveway had some issues.
Well, no, she owns both sides of the road there.
Okay.
So you have Shadow, and then, what is it, 400, I think. And she lives over here on the west side, and the bridge is down here. But when that creek comes through,
yep,
it puts that water back up in here. And over here on, I think this is Goodale's. And she said then it doesn't get away.
But it's down in the valley, right? Or, I guess I was...
It's a very deep ditch.
Yeah, right on the east side, it's really deep.
400, yeah, and this is Shadow.
We're talking this bridge right
it
here.
sits in, and the water sits in there.
I can imagine it sits in the ditch.
Well, it ain't in the ditch, it's on her property.
Oh, wow.
Well, there's, yeah, I'm sure there's some in the ditch too, and it sits in this property, and can't get away. And she was thinking about a culvert through here, I guess.
Show me will you come out and show me your video?
Yeah, I will, Rich, because.
We went out there yet.
I know you went out here 2 years ago too on the same thing, and we couldn't come up with anything, so. And I don't know if she wants you to go dig in her private property.
We're not gonna dig private property, but we went further north, and this individual up there that lives up there on the east side, he's got some culvert issues with driveway, and his culvert's plugged, and he had water running across it, so we got some ditch cleaning to do maybe up there later on.
Either that or I'm not understanding what she's saying, but when I went out there, you could see.
Well, if you could see what was going on.
The creek floods, and it puts that water back in the corner, and then it can't get away. So that seemed to be her issue.
You show me the video, and I got a better understanding of it. I couldn't get away on Saturday.
I was
Easter.
just sitting there waiting for company to come, so I just drove up there.
We had one up on Dancer. We're gonna get we had a little flooding issue there. Went over the road again there. Didn't wash out the whole road, so we just closed part of it. Today we're gonna get our excavator's still getting. We got the hydraulic ram back. We haven't put it on yet. So
what happened to the excavator?
The ram got scratched when we were taking out a bridge, and it scratched the piston on it. So we had to we couldn't rebuild the piston, so we got a new ram on it. But it sat all winter because we didn't need it. So we're trying to get it back running, but we're gonna get mayors out. There's a lot of tree debris down in front of those culverts down there by Otrano, and then we're gonna pull that stuff out today and then reclaim some of that rock and get that moved out today. Not a major thing on the excavator, just you get a few scratches in that. You're trying to clean some things and you end up accidentally bumping that cylinder once in a while, and there's more than just one. I mean, it wasn't done just this year, it's just years of wear. But it just needed to get rebuilt. The bushings in the bucket were getting wore out, so.
Who rebuilt your cylinders?
I don't know where Mark sent it out to. He had to send them out, I guess I haven't seen where it came back from yet.
I had problems with my loader too. Cylinder just seized up and looked like 4 tons of pressure to get it apart.
Oh, really?
Yeah, and that ram is just all scored up, it's just shot.
I know, I've heard you can, if they're small enough, they can re-hard weld them and then grind them down and really polish them. I don't.
I'll have to ask Mark where he sent them, because I found a place in Jessup, but I don't know. Because you can't buy a new cylinder like that. I suppose not. You know, it's like a 1959 loader, you know. You gotta change everything, you know, so you have to spend money. Yeah, I'll stop out.
Okay.
Anything else for the county engineer?
So next week will be the 5-year road plan, maybe.
No, I was just wanting to get you guys something to look at here. Nice to have on paper.
Maybe we could make a wetland up there, it could be the puck number 1 or whatever.
You know, we did have a little discussion yesterday about whether or not we use the roadway for a dike. And it seems to me a lot of this right now is more, first of all, you're gonna have a landowner agree to do something first, and that's the biggest thing right now. And they're gonna probably want the structure on private property, not public right of way. Two things, it causes us sometimes trouble if you've got a structure in the right of way, because now you're talking about if it's too close to the road, then you gotta shield it with guards, you know. That adds more problems for us, and then it's in the right of way, so every time you gotta work on it, technically there's supposed to be a permit to it. It's just, it's easier when it's pushed back, but that doesn't mean we aren't gonna be involved in the process at all. So I just,
Put the structures in the right way.
damming structures,
Oh.
not, I'm talking.
Well, they gotta be, so you can drive right over them.
Well, we're not talking the same structures. Retention structures that are in private property to pond the water.
Right. Well, you just see what they come up with. Mother Nature's.
I think this area might be a good place for it that we just talked about. We could put a dam back up there and have a lake at Brownville again, so they could water ski again like they did
Stock it with fish, I'll go there fishing.
50, 60 years ago.
Okay, let's see, item number 6, open vehicle bids.
96 Ford Ranger and sheriff's car.
Oh, yeah, let's open the bids.
Okay.
Okay.
This is for the Crown Vic, right?
This one got bids on both, so.
Oh.
What do we have, a Crown Vic and a what?
96 Ford Ranger. Okay, this is from Tom Cummings. On the Crown Vic, 901.99. Ford Ranger, 351.99.
Well, I'm still in the running then.
You buying one?
Well, I'm in the running.
Make a luxury automobile, are you?
No,
You getting the Crown Vic?
no.
Another pickup?
You never can have enough pickups.
Okay, that's one person bid twice and he's out there, so. Eric Johnson,
DNR,
yeah. 725 on the car.
725.
Mhm. Say what it was, I'll take that first. This one was on the car, Connie Barnes, Vinton. $500 on the car.
Not a good trend to keep going down in price.
Okay, this one was from Kent Wilder on the pickup. $525.
I'm still in the running.
Whoa,
They're on that here still.
Stick.
Really?
picture.
Buys me? Geez,
I like
how
it.
about that?
It's a good driver, yeah.
Stan Walk, $650.05 on the pickup.
I was gonna bid $50.06.
Passing that for a nickel.
Okay. Here's one from Dave Hartle. $507 on the pickup. Oops.
You're still ahead.
This is the last one. Dustin Adams.
Oh,
Just got through,
$800
On what?
to pick up.
Uh-oh. Well, there you go, Steve.
See, we should have had, so you could up your bid.
That's everything.
That's it?
Gentlemen, what's your pleasure?
Go with the high bids, no, make a motion to go with the high bids. It's 901.99 on the
Car.
Crown Vic,
Mhm.
and 800 on the
Mhm.
Ford Ranger.
Yeah, do we have a second?
Yes, I'd say.
Oh, I'm sorry. Been moved in second, further discussion.
901.99 for the Crown Vic and 800 on the Ranger.
Hearing none, Morel.
Aye.
Loplander.
Aye.
Locke, abstain. Motion carried.
I saw that little thing out there one day, I thought we should have stopped and looked at it, but,
What, the pickup?
yeah. I mean, it wasn't in bad shape,
It's
was
a
it?
good, it's a good truck.
You know, not a lot of rust or anything on it, was there?
Need some front end work?
No, it's already been done.
Oh.
When Hyde drove it,
Oh.
he was all over the road, so we put some shocks in the front of it and some new tires on it.
I was gonna say, really,
It runs good, it's a good runner, it just needs a battery. I like driving it.
Check it out.
See you later.
Okay, let's see. St. Ansgar Historical Society, we'll move down to,
Marion? That's you, Marion.
Well, I'm a prognosticator. I didn't get here when you were doing your budget deals. So I'm coming now to ask if you could give us a grant of $3,000 like you did last year. Help us keep the museum open. Because that's what it's used for, is to pay for the help and the upkeep of bills. We got our water problem in the basement, I think, solved. The clinic came in and did a lot of work in between the two buildings and helped us. But in doing that, we discovered that that is a block tile wall, and we're getting moisture, I think, in behind it. So maybe this year we're gonna be looking at covering with steel or something, I don't know. I gotta look into that. But we'll get a grant or something.
Yeah, I don't have a problem with that. I'd make a motion to add St. Ansgar Historical Society to our budget.
next year's budget.
Or next year's budget for $3,000.
Yeah. That's what it was last year, so. There's inflation, but we'll stick with it this year.
That was your motion?
Yes.
So that's for 2014 budget then?
Yeah.
We already submitted?
Well, you know how that works.
Okay. Some of that tourism money?
Yeah, local option, whatever.
Okay, already. I'll second that.
Been moved and second, further discussion.
And we need something on a letterhead.
Okay, I'll send you a letterhead now.
Okay. Thank you.
Hearing none, Voigtlander.
Aye.
Morel.
Aye.
Locke, aye, motion carried.
There we are.
Thank you, gentlemen.
You're welcome.
Get about 1,400 quarter.
Yeah,
Yeah, this could.
we're about 5,600, which wasn't just too shabby. So.
That goes to the museum.
Minutes, did everybody have a chance to look at the?
I had a chance to read them. I didn't see anything major that I disagreed
We
with.
just had the one copy, we didn't have one from Thursday.
No, I didn't have it Thursdays yet.
Yeah, we'll catch that next
Next
week.
time.
No, I didn't have any problem.
Yeah, so.
I'll make a motion to approve the minutes of March 26th.
I'll second.
Then moved and second, further discussion. Hearing none, Morel.
Aye.
Voigtlander.
Aye.
Locke, aye, motion carried. I think we got everything covered down to meetings attended, don't we? Let's go to meetings attended.
At a meeting, Allison, CSS, Bob, somebody from the state who works under Dr. Palmer was there, gave us about an hour presentation on the mental health overall and things. And his feeling is that the legislature is going to fund that fully this year for the different counties that, we weren't levying the 47.23, and then there was something else too. And then the state's taking over the Medicare part of it. So we still are looking to have a $7 million carryover. This is even before Clayton, Almaquee, and Winship come on. They came on yesterday, or today, yesterday, April 1st, and so it'll be kind of interesting to see where, what our projected expenditures are gonna be for the years coming up, but that was pretty much our meeting.
I don't have any.
And I attended the local food thing here last week. The interesting part of that was apparently one of the fellows that either works for or is part of management or that or Hoover's Hatchery must have a connection with a gal that they're trying to promote Iowa Foods. And so she's getting a distribution network set up. And basically, if you have a product that other people would want, like down to Des Moines, Cedar Rapids, wherever, and you really can't afford to haul it down there and that, for 10%, she'll apparently you can get your product into the system, and so I mean there's different ones that with the honey, and I know one guy that does the maple syrup, you know, and so if they're really looking for outlets, I'll have
Like
to
the
get
maple syrup, does that have to be certified or at all, or can you just
I have no
make
idea.
a bottle that yourself and stick it on the shelf?
I think Ernie Schofield does some of that up there, I'll have to ask him.
Well, I mean, these people that do this type of thing around the county, they should, it's too bad there isn't some place you could have an outlet for that, you know, I mean.
Well, I know they sell the honey right over here, Mark McKinley's got honey. And then I think he's got it out at the Conservation Club too.
Okay, I've
Mark-
seen it out
Mark's-
there,
yeah.
Years ago, we used to have on Highway 9 there,
Yeah.
I think
honey.
Wilbur Pittman have honey too, or one of his, the Hopland.
Yeah, and the guy from St. Ansgar has it at Lucy's,
Okay.
and he sells it by the little bear
Yeah.
or the big gallon, and
Huh, really? Good.
but yeah, it
Bees are extremely important.
and they're trying to work with some of the schools and that to get both trying to educate how to grow vegetables, you know, part of the home ec thing, and also in the fall of that, some of these schools that have a second choice of a menu, like a salad bar and that, there's quite a few local vegetables, again, then that could go into a salad bar, so they're trying to get some of that going, which and apparently there's a lady here in Osage, must be right north of the Lincoln School, someplace in there, that her whole yard must actually be a garden, and she says it's really quite amazing what she all is able to produce, and it looks nice, and but so this summer I have to try to take a look at that.
She's pretty extensive. I interviewed her, and she has so much stuff in there. That it's, like you said, it's about a block northwest of Lincoln.
Okay.
It's a corner house, but it's on the east side of that road is where her garden is, and almost her whole backyard is nothing but different kinds of vegetables.
Drive by.
Well, the thing with that statement,
Nothing's growing right now.
there's a bill coming up that farmers can get credit for their extra produce if they donate it to schools. I believe there's a bill being looked at to help get more locally grown fruits and vegetables in schools through that nutrition program. So there's a bill out there that you can get some kind of a tax credit they're talking about with farmers to try to get more of that going. But she has quite a garden. It's really a lot of stuff that she grows there.
We always took our extra potatoes to either school, Catholic school, or the one in Stacyville when it was open, if we had any extra. County care, a lot of sweet corn and stuff out there.
The Raceville School's been doing that the last couple of years with local farmers bringing in uncut, they have to be uncut vegetables or fruit.
Oh, yeah,
They can be processed ahead of time. Bring them in raw, and then the school can clean them and cut them and then serve them to the students.
Okay.
So they're encouraging farmers or local people, if you have extra, just bring it in to the school so they can do that. But now it's going to a tax credit possibly.
Take some to the food.
Yeah.
The school got a large amount of sweet corn, they could process it themselves and
Mhm.
freeze it.
Yeah, I don't know if they could or not. I know that they've had farmers bring in sweet corn and they've actually served it on the cob to the students.
Gee, we
Yeah.
never had that.
Yeah, so my daughter came home a couple of times and said that they were real excited because they actually had corn on the cob, fresh corn on the cob at lunch a couple days. So farmers can do that. I don't think the school can do all the processing to freeze it,
Okay.
but I know they can just shuck it and do all of it right there and then serve it, boil it and serve it to the students. So they're trying to get a local connection with, like OSH having that garden that they're growing to do that themselves, but they're trying to work with local people to do that.
Yeah, I took some over to the community kitchen and, the Mandarin runs over there. Took some sweet corn and tomatoes over there last year. They put out a lot of meals over there, so they're appreciative of anything, they can get.
Same as schools with the budgets and the way food expenses are with the new nutrition guidelines. It's costing schools more money to offer more choices, so they really appreciate when people bring in that stuff. The school helps the budget quite a bit.
They'd probably like a couple of cows dropped off the rock or two.
I'm sure they wouldn't. The FFA could take care of that. That wouldn't be bad. A couple chickens, a couple cows.
Is there a community garden anywhere around?
OSH has one at the school. They were, through the Blue Zones, was trying to get one started here in the community, but they were trying to get some land over by the cemetery. And I think the city may have said it was okay to have it over on the south side of the cemetery, but I don't know where that's at.
It's about 3 acres south there, and it's you can't dig too deep because then you run into limestone, so nobody's gonna get planted,
Yeah. Yeah, that planting will happen. The other planting they want to do will happen. So they got permission, but they just got to get a group together that actually will get all put together to do it. Raceville has one at their school also. The Jim Green operates west of the football field that they do also. I don't know about St. Ansgar having one, but the schools each have one, but I don't know where St. Ansgar is with doing one, but they're at least getting the kids doing it. But I know OSA just trying to do the community one.
Yeah, there's, our son lives in Minneapolis, in northeast Minneapolis, and there's a community garden about a block north of his place, and I guess you pay the organization so much for your plot or something to rent the plot for the year, and then you have to garden it, of course.
Takes a real dedication of somebody to be in charge of that plot of land, whether it's the school or the community or whatever. It's a real issue because you have these guys who are gonna garden and then they don't garden and they don't grow anything and.
Come July, they forget about it.
Yeah.
Grow weeds.
There's that, seems like gardening goes good through June, then there's that night somewhere in the end of June into July that everything goes to weeds.
That's why we always plant extra. Yeah. Well, we're all organic. We don't use herbicides on anything, so we try and stay ahead of them, and then it gets to that point where, you can't deal with them.
Right.
We try to stay with quite a bit, but we plant a little extra and always seem to have enough.
Anything else for the good of the cause? Okay, the cause is good. We'll stand adjourned at 10:28.